Welcome back. You're still tuned into Inside Out on CNBC-TV18. Well, the stock today in our Swotlight segment is Voltamp Transformers. Interesting business. It is a key player in the transformer manufacturing space, and they also offer aftermarket services post-sales. Transformers are used to regulate voltage levels and transfer electric energy. According to the company, they have around 15% market share in the domestic markets in the transformer manufacturing space, and 85% of their revenues come in from private customers. It caters to a number of industries, you name it, and it's there because transformers are needed across segments. The likes of data centers, water, oil and gas, refineries, steel, mining, minerals, infrastructure, solar, wind, private utilities, there's cement, pharma, auto and auto anks, sugar cogeneration, and a lot more. The company has three segments: power transformers, which is 35% of sales, distribution transformers, which is 45% of sales, and dry transformers, which is 13% of sales. So let's understand the power transmission and distribution chain. Power transformers are used for transmitting electrical power between generators and distribution primary circuits. Then there is a transfer from power generating stations to receiving substations. And then step-down transformers, this is used to transfer it to distribution transformers, which is then sent to the end users, which could be the residential customers like you and I, or commercial customers as well. But what are the growth drivers for these transformers? For power transformers, it is the power generation capex and utility companies. For distribution transformers, it is distribution capex, and for dry transformers, it is industrial capex and also commercial construction. The market size of power transformers is 6,200 crore rupees, with players like Hitachi Energy, GE T&D, CG Power, Siemens, Schneider. For distribution transformers, the size is 8,000 crore rupees, with players like Hitachi Energy, Voltamp, GE T&D, CG Power, Siemens, and Schneider again. The company has long-term contracts, and 70% of the business comes from large clients itself. How does this translate to financials? Well, there has been a steady growth. Revenues from 829 crore rupees in FY19, they have risen to 1,400 crore rupees in FY23 and came in at 300 crore rupees in Q1. Margins show sharp improvement from 11% in FY19 to 17% in FY23 and averaged at 15% in Q1. For profits, Q1 saw 68 crore of profits. This compares with 200 crore rupees that the company saw in FY23 and 85 crores in FY19. The realization for the company was at record high in FY23, from 6.87 lakh in FY18 to 7.8 lakh in FY21 to more than 10 lakh in FY23. However, there is competitive intensity here. Pricing is competitive by MNCs, there are new entrants coming in from China as well, and this leads to pricing pressure in the transformer segment. Now to the working capital cycle. The inventory days reduced to 91 versus 110. The number is in FY23. However, receivables have been an issue that increased to 119 days in FY23, but creditor days have been very strong, just at 1.6 days. The company has strong cash balance at 740 crore rupees. Now, ending with the key shareholders. Promoters hold 50% stake, and in the public shareholding, there are names like UTI Mid Cap Fund, DSP Small Cap Fund, HDFC Small Cap Fund, Nippon Life India Fund. There is Nalanda as well, Nalanda India Fund and Nalanda India Equity Fund Limited. So definitely it is a favorite of small cap fund managers as well. Okay, all right. With that, we've run out of time on this episode of Inside Out. It's a goodbye from Nigel and I. But do write to us and tell us about the companies you want us to discuss and you want to hear about. And we'll feature these on our show. Thanks a lot for watching.